Welcome back to my channel, friends. If you're new here, I'm really glad you clicked on this video. And if you've been here before, you already know we keep it simple, real, and straight to the point. Today, we're talking about something a lot of people are feeling right now, this crypto crash. But here's the twist. This isn't just another prices went down, everyone panicked moment. This crash feels different. And honestly, it can be more dangerous. Because for the first time ever, crypto is crashing while being plugged directly into politics, Wall Street, and the actual global financial system. In past crashes, the pain mostly stayed inside the crypto bubble. Early adopters, hardcore traders, people arguing on Reddit at 3 a.m. This time, it's hitting everyday investors, funds, and even the people who make the rules. That's why this crash is different, and yeah, potentially way more serious. Stick with me, because by the end, you'll see who's actually winning from this crash and what small investors need to understand before they get wiped out. Again, a few years ago, around the start of the pandemic, the entire crypto market was like a niche toy compared to today. It wasn't small, but it wasn't global system big. Fast forward, and even after major drops, crypto became a multi-trillion-dollar machine, and at one point, it peaked around the $4 trillion mark. And when something becomes that big, it stops being a private casino. It becomes a public event. Prices moving up and down doesn't just shift a chart on a trader's laptop, it affects retirements, company balance sheets, and even government decisions. Back in the 2010s, a Bitcoin crash felt like the end of the world if you were in crypto, but on a long-term chart, those moves barely register now. What used to be a bubble in a niche corner has become a mainstream market with real-world consequences, and that changes what a crash actually means. Now, here's the paradox, and this is what makes the current situation feel weird. For years, crypto believers wanted three things: political support, friendly regulators, and big institutional adoption. And guess what? They basically got it. The US political environment has swung way more crypto friendly than in the past, and the vibe from the top is clearly let this industry grow. Regulators have also become more open to the crypto world, and Wall Street has been playing with crypto products, ETFs, and all sorts of don't worry, it's official now packaging. So think about that for a second. Crypto finally goes mainstream, political power seems to be on its side, Wall Street is involved, and still prices dump hard and a ton of people are sitting on losses. That disconnect is exactly why this crash hits differently. Because if the industry can get everything it wanted and still crash like this, then maybe the story people believed that mainstream adoption automatically means stability is just not true. And that leads to the next big change. The losers this time are different. In earlier crashes, a lot of the people who bought early were still way up, even after brutal drops. The people getting destroyed were usually latecomers chasing the top, and it stayed mostly contained inside the crypto crowd. But now the picture has flipped. A huge number of people came in during the mainstream phase, when it felt safer because it was regulated, because institutions were buying, because you could get exposure through familiar investment products, and they're the ones getting smashed. That matters because these aren't just anonymous traders. It's regular workers buying through apps. It's people who thought they were being responsible because they weren't buying random meme coins in a dark corner of the internet. They were buying the legit version of crypto. And when that group loses money, it doesn't just create sad tweets. It creates public anger, political pressure, and loud calls for new rules, or sometimes the opposite, calls for special treatment or bailouts, or someone must step in. The crash stops being a private mess and starts becoming a public fight. Now, let's talk about the part that makes a lot of people uncomfortable, but it's important. Crypto loves to sell the dream of decentralization. No kings, no gatekeepers, no insiders, just the people. But look at what crypto has become. It's now deeply tangled with politics, power, and elite networks. Politically connected figures, big donors, and people close to decision makers have stakes in crypto companies and crypto-linked projects. And once you get to that stage, the crash isn't just about charts and market cycles. It becomes about advantage. Who had access to information first? Who can quietly exit early without panic selling in public? Who can lobby for rules that protect their position? And who is left holding the bag with no protection and no special access? That tension The dream of decentralization versus the reality of concentrated influence is a major reason this phase of crypto feels different. Because the game starts looking less like people versus the system and more like a new system forming, with winners and losers that don't feel random at all. So here's why this crash really matters. People always say this time is different, and usually it's just hype. But structurally, this time really is different. Crypto is bigger and more connected to traditional finance than ever before. It's now sitting inside political power circles, not just fighting them from the outside. And the newest wave of losers isn't just gamblers, it's mainstream investors who believe the story that the regulated, institutional version of crypto meant safety. And the lesson is kind of brutal. Mainstream doesn't mean stable. Regulation doesn't mean prices only go up. Political support doesn't mean you can't get wrecked. In fact, when an asset becomes part of the political machine, the risks often get more complex, not less. Because now you're not just dealing with volatility, you're dealing with incentives, influence, conflicts of interest, and policy moves that usually help the powerful first. If you're in crypto today, the real game isn't just technology versus old finance anymore. It's a three-way battle between innovation, political power, and everyday investors trying not to get crushed in the middle. And that's why I'm saying this crash is more dangerous. Not because prices fell, prices always fall, but because of who's involved now and who's exposed now. If this video helped you understand what's really going on, do me a quick favor. Hit like, share your thoughts in the comments, and subscribe to the channel for more simple, real-world breakdowns about crypto, money, and the stuff that actually affects our lives. Thanks for watching, and I'll see you in the next one.